Let's now talk to the international economist Vicky Pryce. Vicky, that's the snapshot from Wall Street. Just give us the big picture stuff, if you would, and your reaction to this week's rate cut decisions all around the world.
I think the US cut had to come. As we've been hearing, they should have cut earlier, and they finally did. It's a question as to whether they're worried seriously about the economy and how it might move in the future, because, you know, it is true that for the moment, what you're seeing is that the labour market, yes, it's looking a little bit tricky, but overall it's not doing badly. Yes, unemployment has gone up a little bit overall over the last few months, but it isn't huge. And what you've also got, of course, is an economy which is still growing. And second quarter figures were better than the first quarter figures. There's still strength there. We've seen manufacturing suddenly start picking up again in the US after a few months of drops. So there is something there, but I think there is a lot of uncertainty and insecurity in the country right now. So the consumer, yes, perhaps they're spending, 1 month they do, the other month they don't, a little bit like what's going on in the UK. So in other words, there are concerns that what we're seeing right now in terms of reasonable growth is not going to persist. And it's not just what may happen in November with the presidential elections. It's also that the impact of those interest rate increases that the Fed had imposed, and other countries as well, take time, or the impact takes time to be felt in the economy, and it could be felt quite suddenly and cause a recession. And that is what I think increasingly the central bankers are worried about. You did mention at the beginning that there's great variability. Yes, it is true that nothing's happened in Japan and China. Japan had been putting interest rates up a little bit recently, and then, suddenly their currency went up significantly. China has had different problems, cut rates, maybe just waiting to see. But overall, there is some sort of malaise around that perhaps the world economy is slowing down. Lots of other countries have cut rates, whether you look at Canada, for example, and the UK had cut rates earlier. So has had the ECB twice, the European Central Bank. They didn't cut this time, and you wonder why. So the world is moving to a lower inflation environment. There are some concerns about growth. I think we should really be seeing interest rates a lot lower than they have been, because, of course, what happens next may well be very disappointing in terms of economic growth.
You said the Fed should have cut earlier. Does the Fed's cut mean that the world can now breathe a sigh of relief, or is there trouble ahead?
What we've seen is that stock markets reacted originally very positively, as we've just been hearing, and then, of course, they've come down a little bit after that. But, what has happened here in the UK is that we've had a fall in stock markets, certainly today, concern about the fact that interest rates have not been cut. Yes, in terms of what to expect about the world, I think we are going to see quite substantial cuts coming ahead. The stock markets are waiting for this. They've already been pricing quite a lot of cuts in. If they don't come fast, then I think we might see a reverse taking place. So I think it's already been built into expectations, and there's a little bit of frustration that it's taking so long.
And what about the timing? I'm thinking in particular when it comes to the US election. Will voters, do you think, feel a change in their pockets and their pay packets in time for the economy to have an impact on the election result?
What they will see is that mortgage rates come down. We've seen that in the UK already, priced in advance. But yes, indeed, there was a question about whether politics would intervene, and therefore we weren't going to see a cut at all. We might have to wait until after the presidential elections. But really, it was unsustainable. And that should really be helping the current incumbent, the Democrats who are right now in government in the US, or at least certainly the presidential. The president right now is Democrat, and of course the candidate for the Democrats may well benefit from this. But Trump, as we heard, has already claimed that it was his doing that we're where we are. So you never know how individuals will react. But I think interest rates coming down should help both households and businesses.
Vicky, good to see you. Thank you for that. The international economist Vicky Pryce.